Well, hello finally in Barossa Valley, and I'm pleased to join you, albeit by this rather compromised method of doing so. I'm delighted to be able to talk to you at least in this fashion, and I'd like to give you some insights into the tax policy and advocacy team as we operate out of Sydney on behalf of the Tax Institute throughout the nation. Just to give you some sense of who's involved, I am the head of the Tax Policy and Advocacy Unit, and I occupy the position of Senior Tax Counsel. For those of you who have not met me, my name's Bob Deutsch, and if you read your tax vine diligently every week, you will see that I prepare the preamble and write the preamble each week. So if you have some criticisms, I'm the man to level them at. My team consists of a number of individuals. Stephanie Carides, who is the very capable and competent full-time tax counsel. She is responsible for much of the work that the unit does. She is one of the few other full-time members of the team who are directly involved in the tax technical work that we conduct within the unit. There are two part-timers also involved, Bruce Quigley and Angie Ananda, both of whom work variously 2 days a week, doing submissions and being involved in much of the committee work that is conducted by the team. Cheryl Goh is a more recent addition to the team. She's joined us just recently from another arm of the Tax Institute, and she is responsible largely for putting together Tax Vine, which is the weekly newsletter that goes out to all of you that I referred to earlier. And finally, Stephanie Conway is the full-time assistant to virtually the whole team. So everything that happens is usually happening as a result of something that Stephanie has done. So it's a very capable and competent team, and we work very diligently to try and achieve the best possible outcomes for the Tax Institute. Just to give you some sense of what we do, in 2017 the Tax Institute made some 40 submissions to various government and government agencies, and we also had 176 media mentions and attended 189 consultations. That's actually a huge number of consultations, somewhere in the order of almost 4 a week. So you can see there's a lot of work there to conduct when you think about how long each of those consultations can and do take. In 2018, that's calendar 2018, we've already had 41 media mentions. I think that might actually be a little bit more by now. And we've lodged 14 submissions and attended roughly 30 consultations so far this year. I wanted to tell you a little bit about our federal budget submission. That's obviously very topical in view of the fact that the federal budget is only a few days away now. We did lodge back in December of last year a 2018/19 federal budget submission, which was really a wish list of the sort of things that we thought would be useful to have reviewed. The basic thrust of our submission was that we thought that the budget needed to support growth in the Australian economy, as well as making the economy more competitive on the international stage. And largely with that in mind, we have advocated for and continue to advocate for the reduction in corporate tax rates, of which much has already been said. Even though a lot has been said, we still think that more advocacy is needed around that piece, and we will certainly be conducting that advocacy with as much zeal as we can muster during the course of this year. On the other side of the coin, personal marginal tax rates are something that we've also had a lot to say about. I've written a couple of pieces on in Tax Vine about tidying up the rates and the brackets, much of which has received, I'd have to say, a bit of a mixed reception from members, but certainly some genuine and well-founded criticisms contained in some of that feedback, and I've tried to incorporate it in my latest commentary in that space. The main thrust of our submissions, or one of the main thrusts of our submissions, was that the personal tax rate that is currently being suggested by the Labor Party, which would really take overall the rate up to about 49%, is just too high as the top marginal tax rate. And I genuinely believe that a tax rate of something in the order of 50% is just not viable in the long term. Certainly doesn't make us a competitive tax regime by any stretch. We've also talked in the past about standard deductions for employees. That's also in our budget submission. I don't think anything is going to happen in that space on Tuesday night, although I'd have to say there have been bigger surprises in previous budgets, but certainly the feedback and the information that I'm receiving from the tax office and other players in that are relevant in that space would suggest that that deductions generally will be tidied up, and work-related expenses are particularly under the microscope, with the most recent statement being that car expenses will be looked at very carefully by the tax office this current year. But I think that's all business as usual. I don't think there's going to be any major change in the form of standard deductions in the budget coming up next week. There's also been a lot of noise around negative gearing and the CGT discount. I've expressed some views about both those things in the past. I won't reiterate them today, but I will just say that, again, I'm not expecting any major changes in those two areas in the budget next week. But obviously that is going to be a huge political issue in the run-up to the next election, with Labor advocating a halving of the CGT discount and imposing limits on negative gearing in significant ways. Those two proposals are fundamentally opposed by the coalition, so it will make for a very interesting election on those fronts. We also had in our submission a number of comments around GST and fringe benefits tax. GST in particular, I've always held the view and continue to hold the view that we should not have as many exemptions, or I should say more technically correctly, so many GST-free categories, and I would wind back the free categories for basic food, health and education, providing compensation out of the savings that would be made by revising those areas to effectively eliminate them, using the savings partly to compensate pensioners and low-paid workers who are affected in terms of their cost of living. Fringe benefits tax is an area where I think there is very little revenue raised overall. It's something like less than 1% of total federal revenue comes from fringe benefits tax. To devote an entire tax system with different dates and different methods of taxation and different exemptions and qualifications, all for collecting less than 1% of federal revenue, looks to me to be total overkill. And I would have thought reintegrating fringe benefits tax into the ordinary income tax and imposing the tax on employees would be a better way to go. The other two areas where I've heard that there will be some movement in the federal budget are in relation to petroleum resource rent tax and research and development offsets. The petroleum resource rent tax has been on the federal government's mind for some time. There are some uplift factors in that area which do need to be revisited and will be, as I understand it, in the federal budget. R&D is also an area that the government is looking at. There is a perception, rightly or wrongly, but I think it is correct, that R&D offsets are being abused by certain people who should not be entitled to research and development offsets, and that is putting at risk those people who have genuine claims for research and development offsets. So those rules, I think, are almost certain to be tightened up in the budget next week. Judging by, moving to a different topic, judging by the numerous superannuation related submissions that we currently have on foot, it seems to us that we're yet to see this area of the system settle in any meaningful way. Submissions on the $1.6 million caps suggests that issues relating to the caps are still being worked through by practitioners and taxpayers. In addition, the first homeowners superannuation scheme and the so-called downsizers superannuation scheme do seem to require further attention and may be the subject of further submissions during the course of this year. On a different theme again, the small business CGT concessions, the Tax Institute is of the view that the exposure draft that is currently extant on the small business CGT concessions is overly complex and could be redrafted in a much simpler form. And we've put forward some suggestions in that regard. We also consider that the proposal that is currently on the table introduces retrospective restrictions on access to the CGT concessions that were not appropriately detailed in the relevant budget statement. This will impose costs on taxpayers who have genuinely entered into binding agreements based on how they legitimately thought that the law would apply. And for that reason, we consider that the date of effect of the legislation should be deferred to the time at which the exposure draft was released. That would be a compromise position that I think would address at least some of the concerns that members have expressed. The current exposure draft also has a distorting effect on how businesses are structured, essentially placing a business that is operated through a company at a further disadvantage when compared to any other structure such as a trust or a partnership. Furthermore, it disadvantages existing businesses in a company structure when compared to a business that is operated through a trust. We have raised these various concerns with both the Minister for Revenue and Financial Services Office as well as the Shadow Assistant Treasurer's Office, and we hope that we will see some traction on this issue in the near future. Finally, I'd just like to mention that the tax policy and advocacy team is very heavily supported by a network of volunteers who act on a range of technical committees. This includes committees dealing with dispute resolution, fringe benefits tax and employment taxes, GST, large business and international tax issues, not-for-profit tax issues, small to medium enterprises and tax practitioner issues, and of course superannuation. And I'd like to use this opportunity to thank all our volunteer members for the important contribution that they make to the Institute's policy and advocacy activities, and many of you would be at the convention in the Barossa. So from me personally, thank you for the time and effort which you put into these activities. They're vital for the future work of the Tax Institute, and quite frankly, without that bevy of volunteers, we would be half the place we are, perhaps less, if they were not doing that work. I'd also like to take this opportunity to encourage members that are interested in policy and practice issues to get involved in the Institute's work, essentially through those committees, and you can, by doing so, make a difference both to the tax system and the profession. So thank you for listening to me. I hope you found it of some relevance and some importance, and I look forward to seeing many of you at future conferences. I will be at the New South Wales State Convention, and I'll also be up on the Gold Coast for the Private Business Tax Retreat. So I hope to see you all later in the year. Thank you.